Objects in the mirror can be closer than they appear, and that's exactly what the screen is indicating too. The screen may show that the indices are absolutely flat, but does not take away from the fact that there is a lot of stock-specific activity. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I'm Hormaz Patakia, and back with me today is Vamakshi Dhuria. Vamakshi, good afternoon. Absolutely quiet going into the holiday, but of course there are plenty of earnings reactions that we are tracking.
Well, absolutely, Hormaz. The markets as of now have not gone anywhere. We're at the same place where we let off yesterday. And it's very surprising given that it's the weekly expiry today, right? The broader indices too underperforming the benchmark indices. But on that note, there's a lot lined up on the show. So let's get started with some of the top headlines. Stocks move in a narrow range. Realty and healthcare are prominent gainers, while consumer durables and financials drag. Mid-caps marginally underperform.
Vishal Mega Mart is among the top gainers on the Nifty 500 following a strong fourth quarter. Revenue growth is in line with expectations, and margins also climbed nearly 200 basis points from last year.
Auto ancillary stocks like Schaeffler India, CEAT surge in trade after reporting a strong set of numbers. Schaeffler reported double-digit growth in all the segments. CEAT tells CNBC-TV18 that they expect double-digit growth for standalone business in FY26.
Bajaj Industries is among the top losers in today's trade after the fourth quarter net profit more than halves. Revenue also falls. Shoppers Stop has also slipped after reporting a muted revenue and EBITDA growth in the fourth quarter.
Well, 24,337, that's where the Nifty is at. But, when you look at the advanced decline ratio, that is largely in favor of the declines. The Nifty Midcap Index is down nearly 0.3%. The small cap index too is reeling under a fair bit of pressure. As far as some specific stocks are concerned, look at the move that has come in on, the stocks like Bajaj Finance, Jana Small Finance Bank. They're all reacting to a weak set of numbers. But, plenty of action in the mid-cap space. And to explain just that, Hormaz has moved across to the wall, and he will be taking us through our special segment, Midcap Movers.
Well, firstly, I'd like to thank you, Vamakshi, for telling me that it's Schaeffler and not Schaeffler, as we like to call it. But of course, there is a lot of action in the broader market. So as you can see there, RR Kabel is now up 8%, extending its gains. Sonata Software too having a good day today. IGL is up 4.5%. Brainbees, or as popularly known as First Cry too, seeing gains of around 3.5% to 4% in today's trading session. When in the earnings reactions, of course, you're seeing numbers from Ujjivan Small Finance Bank flashing on your screen. That stock too has taken a bit of a nosedive after the net core profit is down 75% from last year. But take a look at CEAT. Strong commentary, 9% higher. Vishal Mega Mart too, a similar quantum. Schaeffler is up 6%, and Bajaj Industries now extending its losses, down 7% now at the lowest point of the day. That positive management commentary from CEAT is rubbing off on other tire names as well, and with names like JK Tyre, Apollo, Balkrishna, all of them at or near the highest point of the day, gains of anywhere between 3 to 4%. Stocks that are doing well in today's trading session also include the real estate names, and stocks like Macrotech, DLF, Godrej Properties are all seeing healthy gains in today's trading session. But other than Bajaj Industries, there are other losers too in the broader markets in today's trading session, and we take a look at those. We include Westlife Foodworld, Sterling and Wilson, 5-Star Business Finance also continues to fall, and KFin Tech another 5.5% shaved off today. All of these names at the lowest point of the day today, Vamakshi.
Well, thank you so much for that, Hormaz. A comprehensive list as always. But it's time to now welcome Jay Thakkar from ICICI Securities for a technical check on the market. Good afternoon, Jay. This is Vamakshi joining in. So give us a sense of what you think about the market, because the markets have been consolidating in a narrow range over the last 2 sessions at least. So where are the markets headed from here on? Is it a party for the bulls or the bears?
Hi, good afternoon to you, Amakshi and Hormaz. Well, see, I would say the party has so far has been for the bulls only. I mean, we have seen a very sharp recovery in the index, 21,750 to almost 24,300, 400 range now, right? And last time trading sessions, we have seen a good buying coming in by the FIs as well. So we are not seeing profit booking from the high levels despite the India VIX going up. I mean, since 8-10 trading sessions, the India VIX has been slowly and steadily going up, and it's now closer to 17 levels from 14 levels, So it's very rare to see both market and India VIX at the high levels. But the FI participation along with the DI participation in the last 3 days has been such that both FI and DI both have actually contributed on the positive side to the index, and which has definitely supported the market. Otherwise, if you see from expiry to expiry, week on week, from last Thursday to today, actually, we have not seen much of the change. I mean, sort of, doji star, or maybe spinning top candlestick getting formed at the high levels, or maybe the range has been too narrow. So at these high levels, I would say comfort for me would be only about 24,400 to initiate any fresh longs as far as index is concerned. Stock specific moves will continue, but index specific only 24,400. If those levels get taken off, ultimately our May targets for the month May series are 24,800 will be achieved straight away thereafter. Else you can see some profit booking in the range of 24,000 to 23,800. So anyone who's trading index, either buy on dips in the range of 23,800 to 24,000, else buy about 24,400. I mean, that could be the strategy going forward in short term. However, stock specifically, the action will continue. And actually, as you were mentioning about the Nifty Realty Index, which is up quite much today, we are seeing good short covering out there post the results. I mean, Oberoi is out, Godrej is out. So I think that Oberoi Realty can see good up move from here on. And the overall there are good shorts there. So I'm targeting around 750 to 1800 levels in the near term. One can place a stop loss below 1590, and in anticipation of short covering, one can buy Oberoi Realty. And similarly, one can buy Astral as well. I mean, Astral is trading around the levels of 1365. One can target 1450, placing a stop loss below 1330. This too is a short covering candidate. I mean, short covering is witnessed everywhere across the board. I mean, you have been seeing TI Industries since past 2 days as well. Likewise, Astral might also see a good up move. So these are the two buy recommendations.
All right, Jay, thank you so much for sparing time and joining us today, and with your views on the index and on specific stocks as well. We take a short break, and just before we do that, here's some good news. And Network 18 has beaten Times Internet to become the #1 publisher on ComScore. News 18 has raced past the Times of India to be the #1 news brand in the country. And that's not all. Network 18 is the #1 digital network in the news and information category as per ComScore report of March 2025. News18.com has 38% more users on native and social platforms than compared to the Times of India. As per the ComScore report of March 2025, Network 18 is way ahead of the Times Internet with over 55% more internet users on native and social platforms.
Welcome back. You're watching Midcap Radar on CNBC-TV18. A couple of results have now come through. Look at Greaves Cotton. After its numbers, that stock has surged higher by almost 7.7%. When we look at the margins, they've seen a substantial improvement. Look at the uptick that has come in after the numbers have come through. Apart from that, we also saw Go Colors report its Q4 numbers. When we look at the margins here as well, substantial improvement on a year-on-year basis from 29.6% to 35.8%. Very strong up move on Go Colors, that is Go Fashion as well. The stock is trading higher by almost 7%. And apart from that, Crystal as well reported its numbers just a short while ago. The numbers were flashing at the bottom of your screen. The margins here stand at 28.54%. The stock as of now is up nearly 0.9%. But, let's also get in another management on the show. Capital Small Finance Bank is in focus on the back of its Q4 numbers. Profit after tax and net interest margin came in healthy. To discuss this and more, we now have Sarvajit Singh Samra, MD and CEO of Capital Small Finance Bank, joining in with us. Well, good afternoon to you, sir. My first question is on the deposits. Some banks have recorded strong deposit growth this quarter, but when we look at your numbers on quarter-on-quarter basis, it's a dip. Why is that so?
Actually, the thing is, we are a bank which were on a low CD ratio, which we feel. We were pushing our CD ratio. So otherwise, this was the reason why we had a calibrated deposit growth. Otherwise, just to give a color of a deposit book, we are 92.5% retail deposit. And where the CASA share is almost 37%. And we have been able to, in spite of the pressures on CASA and all, we have been able to maintain it. And otherwise, this was otherwise as per our plan, and there's nothing such of any kind of pressure on this growth or nothing like that.
Mr. Samra, good afternoon. Thank you for joining in. So what kind of deposit growth are you penciling in for FY26? And if I could club in one more question, according to the CASA ratio as well, which has also declined sharply, what do you attribute that to, and when and at what level do you see that stabilizing?
No, actually, okay, answering your first question, like we in this financial year, keeping in view the present micro and macro environment, we are giving a guidance of 20% plus growth in our credit advances. And similarly to support that, we are the target for deposit is 16% plus to support that. And with this, since liquidity is high, and we want to further push our CD ratio, which last year also has resulted favorably on a net interest margin and of course on ROTA as well. And this is how we want to take it further. CASA, actually, we otherwise are, just to give up quickly a picture of that, we are a CASA driven organization always. And it's a true sense CASA, where like after conversion from a local area bank to small finance bank on savings banks, we were paying 3.5%, which now from 1st of May onwards, we have reduced it slightly from 3.5 to 3.35. And we have been able to maintain the cost of deposit 5.9 and the cost of funds at 6%. So we of course, there was a lot of pressure on CASA, which we have seen, but now I am very confident with the interest cuts. When the gap between the low cost deposit and your term deposit increases, you see pressure on CASAs. But with now the rate cuts, two which have already happened, and we expect more cuts also in this financial year. So I see improvement in CASA going ahead.
Sure. Thank you so much for that. And, I'd also like to ask you about your NIMs, because when we look at your NIMs, they have contracted sequentially. Now, with the rate cuts, as you mentioned, coming in, with RBI looking to infuse a lot more liquidity in the month of May to enable rate transmission, what can it spell for your NIMs in FY26? What is the range that you're guiding for?
Yeah, first I'll just want to apprise that the NIM, which last year at the close of financial year 24 was 3.9. In this financial year, we improve it to 4.2. So with, of course, now the rate cuts and all, we will definitely, there's going to be a pressure on NIM, which I see in our business plan. We want to further improve it. First, our endeavor is to maintain it, since the rate cuts have already factored in. So we want to maintain it, and of course, I see a further improvement to that, to the NIM of 4.2, which we have put on this fiscal. Yeah.
What about your bottom line, Mr. Samra? Other income had a significant contribution in the boost that you have seen. What is the nature of this other income, if you could specify that for us, sir?
Other income is a stable income, which is a fee income, of course. The fee income, and of course, it comes now from the partnership also, like the banker income. So since actually, otherwise, after our conversion, there were a lot of new customers onboarding, which happened in the last all these years now, with the decent size of customer base, where like the deepening has started. Where like in our matured branches, I'm talking about branches which are say 5 years old, where like lot of deepening happens, and there's a further legroom available to improve it further this fiscal and coming in the coming time also.
Sure, got that. And one more question actually on your return on equity. That stood at 10%. 2 years ago, it was at 17%. So what is your outlook going forward for return on equity, that is ROE, and return on assets for FY26 as well as FY27, if you can share that guidance?
Yeah, actually, the 17% plus was like before raising our capital. We raised capital last year, So there was a fresh infusion of 450 crores of fresh capital. So this is the reason, since over a period of time we are consuming this capital. So I think we'll take it up to the level where we have earlier done the capital raise, and then we'll think of raising the capital further. So it's a journey. So since the capital was raised recently only, so we are well consuming. It's a growth capital. We are well consuming the growth capital, and we'll consuming over the period of time. And further capital raising we aim after we reaches at that optimum level of return on.
Right. One final question, Mr. Samra, very quickly, if you could tell us, what are your current cost of funds and what are you expecting them to be as the year goes by?
Current cost of deposit is 5.9 and cost of funds is 6%. As rate cuts are coming in, already we have repriced our savings book, which earlier was 3.5%, which now 1st of May, it's going to be 3.35%. And even bulk deposit, we have done a cut on the bulk deposit. So I think the both should go down as we move towards in the next year, and we expect more cuts also.
Sure. Thank you so much for that. And, thank you so much for giving us those insights on your numbers. But from one earnings to the other, Exide, the numbers are flashing at the bottom of your screen. The stock seems to have taken a sharp knock. Sharp fall is what we're seeing. When we look at the EBITDA, that is down nearly 9.6% on a year-on-year basis. The margins too have contracted from 12.3% to 11.2%. But apart from that, when we look at the revenue as well, the number will come up for you. The revenue is seeing a downtick of almost 3.7%. And what they've also announced is that they will be investing 1,200 crores in Exide Energy Solution. So as of now, when we look at the numbers, doesn't look like such a great set of numbers. So the stock is tanking on the back of that. But on that note, let's slip into a very short break. We'll get you more on the markets and stock-specific action on the other side. So don't go anywhere. Stay tuned.
Today, 6 years on, a much more real possibility going to the Lal Street listing. Work has already begun on that.
We have started that work. The question keeps coming, I would say sometimes unfairly, because we are a young business. We get compared with other companies which are higher vintage. We are more serious about it today than at any point in the last few years.
Given the fact that you have expansion plans at this point in time, what are we talking about in terms of the kind of capital that you will be deploying in the next few years?
So we've publicly announced our plans to deploy close to 1,500 crores across not just capex, but generally investments in totality across renewables and electronics. I would say we're halfway there. Time for Indian manufacturing is here to stay. I think India can become a $1 trillion economy in manufacturing alone. What is happening today will probably happen only once in our lifetime. In terms of the shift that is happening globally, will hopefully create a bright spot for the economy.
Welcome back. Just before we move on, pull up Exide again. The stock is now extending its losses after its fourth quarter results that were flashing at the bottom of your screens just a few minutes ago. The margins have narrowed from the same quarter last year. More capital infusion in its energy solutions business as well. So the street not liking what the numbers have been presented by Exide. 3% lower now on the stock at the lowest point of the day. What's also not doing well today is Shoppers Stop after its muted revenue and EBITDA growth in the fourth quarter. Mangalam is here with more on that. Mangalam.
Well, Shoppers Stop is down 7% in today's trading session. They reported their fourth quarter numbers. The revenues grew a feeble 1.7% and the EBITDA too grew just about 2% itself, telling you the margins were absolutely flat around that 16% mark as well. There was a sharp gash on the net profit of almost 90%, but that hasn't much to do with the operational performance of the company. The revenue actually, grew by 1.7%, EBITDA just 2%. Net profit fell because the depreciation was higher, finance costs were slightly higher, and the other income was lower by almost 50%. So those factors contributed to a decline in the profitability. Some of the internals which were slightly positive were the premium sales, which increased in contribution to 65%, and that grew 7%. Their own loyalty program saw a contribution of 82%, which was an improvement of nearly 400 basis points. And Intune, which is the competitive value fashion stuff that they've launched in competition with Trent's Zudio, has actually seen growth of nearly 200 crores in this financial year and has seen a growth of 3x year on year on a low base. So that is something that we'll most definitely keep an eye out on going forward for Shoppers Stop as well. They've added 21 stores, 15 of which have been Intune. So that's something we'll track, apart from their investment in the beauty vertical as well, where they've decided to invest another 50 crores, and that's reported around 67 crore sales in the fourth quarter.
Not at the lowest point of the day now is Shoppers Stop. Mangalam, thanks a lot for that. By the way, Exide is seeing some recovery from the lows after the management commentary there, which looks kind of buoyant, with registering double-digit growth in the mobility business driven by the technologically advanced products. And they also mentioned that the demand in the replacement market remains buoyant as well, and they are maintaining that double-digit growth momentum in the auto replacement, industrial UPS and the solar verticals as well. Both in the two-wheeler and the four-wheeler battery market, the replacement market, the demand remains buoyant. So for now, Exide, a slight recovery from the lows of the day, but still 2.25% lower after its earnings miss. But with that, we call time on this edition of Midcap Radar. The index remains absolutely flat. Your stocks for the next 30 minutes.